right, everyone, we're about to get started in just a moment. So if you'd like to grab yourself a drink and then have a seat, we'll get started in just a moment. All right, everyone, if you want to grab a drink and have a seat, we'll get started. Thank you. Give me that while I'm up there, and then I'll. You're starting, aren't you? It's okay, it's about the recording.
I think we're on. Yes.
Starting at 16 or whatever. I do. I usually put it on a like here.
Oh yeah.
Just like starting.
Oh, okay. Alrighty, thanks everyone. People grab their last drinks, and I remember where I'm meant to stand for the best Zoom appearance. Thanks everyone for coming out. We are in the middle of a bear market, but look, we've got probably 30 people here, possibly more. So we're really grateful to everyone. We are indeed the true believers. We are the ones who are continuing to build, continuing to do stuff, and we are still here trading. We're observing the market. In Rex's case, perhaps trading. I don't know about Rex. I don't know. My name is Matt Hooper. This is ATB Brisbane. We meet here every month on the first Wednesday. And tonight we're delighted to be sponsored by Kraken, a little bit of work that we've put together over the last few weeks, dealing with their Australian and US teams. And it's been a great pleasure to work with Jonathon, who we're going to hear from later on. So thank you again tonight for everything you've done, Jonathon. So if my clicker picks up, picking up. Audio's good, says Andrew online. Hello, Andrew. Isn't that? What's going on? Okay. We're going to hear from Renee tonight. Renee is a crypto savvy person from Southeast Queensland by the moniker She's Crypto Savvy. That tells us everything we need to know. Renee is awesome. She's does the social. She used to be with Pummel Health and other startups. She's now with CellDAO, and she can tell you a little bit more about her story. Then we're going to be hearing from Sean Anderson from DMCG Global. Where's Sean? Sean is somewhere in the house. Hope he hasn't done a runner. Oh, he is here. Excellent, Sean. Sean is going to be talking about staying safe on DEXs, and then we're going to hear from Jonathon, I think, to bring the centralised exchange point of view. So it's going to be very interesting tonight, and maybe we finish off with some Q&A. All things blockchain, as most of you will know, we are chain agnostic, so we pride ourselves on being maxis in no particular way, and if we are, well, we won't beat you over the head with it. So that's what we pride ourselves on, and that makes for an interesting meetup in that we can talk across, and we try to educate across lots of the tech, the way it works. We've had some excellent speakers throughout the year talk about what's going on in the regulatory space. We've talked about all sorts of things. So we don't just do it ourselves. Danielle and I might kind of be the front for it at the moment, but we do have others that are working behind the scenes. Jennifer on the doors, thank you again tonight. She's also our treasurer. She will make sure at the end of the financial year that our books are good, and various other things going on there. So that's good tonight. And Renee, of course, making the spread. I've already given a shout out for her speaking, but she's also made the spread tonight. Thank you, Renee. Done a great job. It was awesome. Sponsored by Kraken. Got the right font there, Jonathon. Right logo, right branding. I think that slide looks awesome. That's come up really well. Oh, we want to get that. Well, we need to get that with Jonathon later. We can do that. It's not about me. But no, it's looking awesome. Those colors are very standout. We do have other standing sponsors. Thank you very much to our sponsors. Some of them we've got SwiftX. We've got Sile Attacks in the room. It's hard when you're standing up here. You just kind of mix your words, unless you're really thinking Sile Attacks with Nick Christie in the room. Have we got SwiftX now that I've mentioned them? Competitor would have been interesting. It's always interesting to see whether other exchanges come out, when there's an event that's sponsored by an exchange, but I won't go on about that. Other sponsors of note, Labris, obviously, Entersoft doing security. Haven't heard from Paul Kang for a while. I know he's been busy. Next year, though, we're looking for sponsors again. So if you do have a company that is interested in sponsoring, do reach out to Danielle or me and we'll sign you up. Sponsorships start from as little as $500 just for this logo placement and some other, props that we'll give you throughout the year. So we can get a deck to you if you're interested in that. And really, I'm going to hand over to Danielle, who's going to run us through the rest of the night. But we're delighted to be sponsored and hosted by Kraken. And I hope you enjoy the educational information that comes tonight. Over to you, Danielle.
Thank you very much, Matt. For those of you that don't know me, my name is Danielle Marie, and just at a quick show of hands, who's very first time to an ATB meetup? Nice. I like that. That makes me so excited. We're in the middle of a bear market and we've got almost a good dozen of new people. And who's very first time here in Innovate? I know there was a couple of people. Okay, cool. Because we used to be hosted at the precinct, and so we've moved to Innovate. So I just like to kind of get a gauge of who's in the room. So my name is Danielle Marie. I'm a Web3 educator and community builder. I'm the head trainer for TAFE Queensland, where I deliver the Diploma of Applied Blockchain, amongst many other hats that I wear. So if you're interested in education, I'm your girl. So come and speak to me, or community building. I'm just going to go through a few things that are coming up towards the end of the year. We have the blockies. Unfortunately, nominations are closed off. But anybody that is going down to the crypto convention, which I'm going to talk to you about just in a moment, this is on the 9th. So if anybody wants to attend that, you can attend it and you can purchase tickets and go to the event. Now, who here is already going to the crypto convention? Okay, who here is thinking about it? Maybe might go? Well, Rex? Jennifer, anyone else, come and see me and I've got a ticket for you. So we've actually been given a certain amount of tickets by the Australian Crypto Convention to give to our community. So don't use that discount code because I have a 100% discount code for you. But please come and speak me. Now, that doesn't include your airfare and your accommodation, just to clarify the terms and conditions here. But we've been working closely with the Australian Crypto Convention, and last year we hosted an event. So they've given us some tickets to give away to our community members. So anybody that is interested, please either speak to me tonight or reach out to us. LinkedIn is usually the best place to get me. I'm very terrible at the rest. You know that you've got the chat up. Blockchain Christmas party. We have actually secured the venue today. Okay, so we're working with Blockchain Australia. So we're partnering. If you don't know who Blockchain Australia is, they're the kind of governing associating body of Australia, blockchain out of Australia. So we're partnering up with them. It is going to be on December 2nd. And there's more details, but please keep an eye out for that. And that will be a fun event that we have coming up. So when you, Matt, when you toggle between that, that's when the clicker stops. Yeah. Do I have one more? The last thing that I'm going to mention, as I said, I have lots of many different hats that I wear. So I founded All Things Blockchain in November 2020. About 3 years ago, I started She's Blockchain Savvy back in 2020. And it's led me to this new initiative that I am going to be focusing on next year, Women in Digital Economy, which we are going to be focusing on mentorship, education, and community building, primarily focused on developing some male ally programs and how to bring more women into the space. So anyone that is interested in any of that type of stuff, please come and speak to me and keep an eye out because there'll be some more information on that coming next year. And whatever you've done, again, I think it's when you touch the other screen. Okay, technical difficulties, but we're getting there. All right, that's it for me. So I'm going to bring up Renee. Funny story about Renee. I've actually known her for, gosh, almost 20 years. I'm from Canada, for anybody if they haven't heard. And it was maybe 3 years ago. We were doing the bull market cruise. I'm not sure if anybody was anyone on that in this room on the bull market cruise besides Renee. So we had about 160 people go on the big yacht in the middle of the bull market. It was pretty fun. And Renee walks up, right? And I'm like, that chick looks really familiar. And she actually used to work for my partner and I back in Canada. And then she came on and I had launched, she's blockchain savvy, and she came on and started helping me with socials, and she's a big crypto trader and she started doing her own thing. She's crypto savvy. So that's just a short little story about mine and Renee's journey. So I'm going to bring up Renee, and she knows a lot about crypto trading. She's not going to talk about crypto trading today, but she's just going to give you a quick little rundown of the differences between centralized and decentralized exchanges before Sean and Jonathan give us a lowdown on how to stay safe on both of those, because there's pros and cons to using decentralized exchanges, and there's some cons and pros to using centralized exchanges. And I think that's really important. So let's welcome Renee.
Thank you so much, everybody. So that's our kind of like Tweedledee and Tweedledum. So she's blockchain savvy, and she's a blockchain trader, and she's crypto savvy because I'm a crypto trader. So that's what really brought me into crypto. My story starts like very long time about, I was literally just talking about this. So when I first started trading, I started trading options, and we didn't have smartphones. So I actually had a beeper. That was like about 20 years ago, because we didn't have smartphones. So if my stocks like actually trade, we had little orange beepers, and they used to like go off, and then we'd have to call our actual broker and make trades, because that's like, and we're still using the same technology to trade like actual traditional stocks these days. But the really exciting stuff is really happening in crypto. So basically, I'm just going to have a really quick difference between centralized exchanges and decentralized exchanges. So just a quick show of hands, who has an account with a centralized exchange? So that's pretty much everybody. And then who has an account with a decentralized exchange? So that's still a lot of people. So that's actually really interesting. That's great. Well, decentralized, you connect, well, that's one of the big differences. So so that's actually a good point. So basically, one of the big differences between centralized exchanges and decentralized exchanges is that centralized exchanges, you don't technically own your wallet. The centralized exchange is actually the custodian of that wallet. And that's where in crypto, you come up with that saying we always say, not your keys, not your coins, because those coins belong to the crypto exchange. But with a decentralized exchange, you actually connect your personal wallet to the decentralized exchange. And that's one of the big differences between both. That has good points and it has bad points, depending on your education level, which exchanges you're actually going to put it towards. So if you're a new trader, don't know what you're doing, it's probably a smarter thing to start with a centralized exchange, because if you lose your keys, you're done. Whereas like differently, if you have an exchange, you could always like ask for your password, because it's not technically your account. That is one of the big differences between both. So basically, centralized is a platform where transactions are processed and managed by a company or third party. So that is the centralized exchange. Centralized exchanges allow buyers and sellers to trade the crypto for a fee, and then the crypto exchange is in between both. And usually that's facilitated through a market maker, which is an actual company who facilitates as the market maker. So centralized exchanges have lots of liquidity, lots of different trading players, and there's lots of different trading tools that you can do on centralized exchanges. So in the past couple of years, the centralized exchanges have had the most versatility, the most different functions, but the DeFi exchanges are coming up quickly behind. So I only trade on centralized exchanges. That's just my style. I mostly trade Bitcoin, Ethereum. I do prefer these centralized exchanges. They just work better for me. But these new exchanges that are coming through in the decentralized DeFi world are also very, very cool. So there's different benefits and different drawbacks between both. So centralized exchanges have had a history of being hacked, but then also DeFi exchanges have also been hacked before. So it is actually a risk on both different types. So the decentralized exchanges, they allow users to trade cryptocurrencies peer-to-peer. And so instead of on a centralized exchange, they use a market maker. In a decentralized exchange, they use an automated market maker, which is basically an algorithm. And so there is no centralized exchange, and you trade between peer-to-peer using the algorithm. So using the smart contracts, they match the buyers and sellers as opposed to using an actual centralized market maker. The benefits, so there are many different benefits. One of the biggest ones is it's your keys and your coins. So using your personal wallet, you are totally in control of your own wallet at all times. And so that has a lot of different security benefits. But again, if you don't know what you're doing, it does also have risks as well. And that's basically one of the drawbacks. But then the other drawbacks is that in general, there's much low liquidity. So if you're trading like Pepe coin, or if you're trading like all of these other random coins that come out, you will not get them on a centralized exchange because it's often very expensive. It's very difficult. You have to follow a lot of regulations to get into the centralized exchange. But anybody, like you could start a coin, and then you could go onto Uniswap and launch your coin and start trading as long as you provide the liquidity for it. So the key differences. So the security. It says it offers more security. That is a dual kind of thing. So again, security being bigger. If you're gonna lose your password, it is gonna be more secure. But you will always have the security of having your own wallet if you choose so in a decentralized exchange. The liquidity, again, so the major big exchanges have much more liquidity. So if you are trading in higher volumes, it's always going to be easier to trade with a centralized exchange. The decentralization part is also basically you're not vulnerable to third-party attacks. So they wanted to actually sue Uniswap at one point, but technically Uniswap doesn't own Uniswap, so they couldn't actually do anything. So that was an interesting kind of situation. And then privacy. So privacy, these decentralized exchanges are no KYC. So KYC is know your customer. It doesn't mean that you do not have to register yourself to be known. So you can remain your own privacy. But with a centralized exchange, most centralized exchanges, you have to KYC, which means you have to prove your identity before you're actually able to use the centralized exchange. So which one is right for you? For most people, if you're starting centralized exchange, they're big, they've got lots of great customer service, they've got really great UX, so really easy user interfaces for most normal people like coming into the industry. But decentralized exchanges, they're doing some really cool stuff. You retain your own keys, and you do also have your own privacy with that. So, but for most people, both. Have one, try which one fits you. There's so many different exchanges. We're going to hear from Kraken today. They're one of the good exchanges in Australia because they do offer lots of flexibility. So depending on your needs, it's definitely great to try and explore different opportunities. But yeah. And then we got Sean next.
Renee, for that quick little rundown, if you didn't really already know the differences between centralized and decentralized, now you know the level basics. So the next gentleman I'm going to bring up, Sean, I don't know if he would categorize himself as a full-time degen yet. Not yet, but Sean is actually, have you just finished your diploma? Yeah, well, congratulations. He's just finished his diploma of applied blockchain. He's also was studying at TAFE Queensland, but with another instructor. And I got chatting with him at an event, as you do, and he was telling me all about, you know, the degen world and the decentralized exchanges, and I find it so fascinating. And so I think it was a perfect opportunity for somebody that is playing in that space to share how we could potentially stay safe in it, because it can be really intimidating, but once you've learned some tips and tricks how to stay safe. So Sean, bring you up, and I don't know too much about DMCG Global, so you can give us a little rundown.
Thank you. Awesome. Hello, welcome everyone. Hope you're having a lovely evening so far. For those, you can still hear me, though, right? Okay. So yeah, for those of you who don't know me, my name is Sean Anderson, and I work as a software consultant at DMCG Global. Now, the reason I call myself a software consultant is because by day I do tech recruitment consulting and AI consulting. Okay. And by night, well, I try to become a full-blown degen. Hence why tonight's presentation is on how to mitigate risk while trading in DeFi. Now, can I please get a show of hands? Who here in the room has had the following scenario happen to them? Yeah, the infamous rug pull. Yeah, it's a great feeling, isn't it? When you put your money into a token and then the next minute, a giant red dildo of a candle appears in front of you. Now, if your reaction looks anything like this man right here, when a rug pull occurs, then you have far too much money invested into the market, right? So the question then becomes, how do we degen safely, right? How do we mitigate risk while trading in DeFi? How do we go from this state of emotion to this state of emotion, right? So the beauty of crypto and DeFi in particular is that even if you lose 10 trades in a row, even if you're rug pulled 10 times in a row, there's always a 10, 20, 50, 100x buying opportunity right around the corner, right? So patience is key, risk management is key, right? Which brings me to my hot tip number one, right? So do your own research, guys, due diligence. Now, before I buy into any token, I always like to make sure that there's some sort of social media presence, right? And by social media presence, I mean in the context of crypto, having an account on X, okay? So formerly known as Twitter, crypto Twitter, as we all know, it's the town hall for all things crypto, right? So making sure that they have an account on X. In addition to that, if they have a Telegram group, a Discord group, even better. Ultimately, what we're looking for is making sure that the community sentiment is positive, right? Now, in addition to that, you want to make sure that the team is pushing out content frequently. You want to make sure that the content that they're pushing out is literate, right? You want to make sure they at least know what they sound like they're doing. In addition to that, you want to make sure they have a website. The website is well made, okay? And, ideally they have, they have a non-generic roadmap in place, right? So if you come across a roadmap where it says, they're promising some sort of revolutionary blockchain game, stay the fuck away from it, right? Now, and even more ideal is if they're providing utility, right? They're solving some sort of problem, right? So take Telegram bots, for instance, if you've heard of, Unibot, Aimbot, Banana, like solving actual problems. Okay, so you're probably thinking, how do I even go about finding a token, a project with a social media presence in the first place? Which brings me to tool number one. So dexscreener.com. Can I get a show of hands? Who has heard of DexScreener? Who's using it? So it's a great platform. So this is where I go to find my tokens. Now, for the purposes of today's presentation, the theme and focus will be around Uniswap Ethereum-based tokens. But as you can see, you can filter it by other DEXs like PancakeSwap, SushiSwap, and then other chains such as Solana and Avalanche. So the choice is yours, but what you need to get into the habit of doing is applying filters, right? Because it's all about mitigating risk. As you can see on the bottom here, you have a filter tab. So you want to click that, and it's going to take you to the following section, right? So this is where you want to be applying your filters. Now, I get into the habit of applying minimum 3 filters, right? So firstly, you want to make sure that the market cap or FDV, so fully diluted value, is at least 5 times the amount of the liquidity. Okay, this is exactly how I set it up. And then the pair age, which is the token's age, minimum 24 hours. Okay, because what we're doing here is we're mitigating the risk. Okay, and you'll find that the reason I do that is because 99% of tokens that you come across on these platforms, they are rugged within the first 24 hours. Right. So if you're applying that filter, you're sticking within these parameters, then again, you're reducing the chances of coming across rug pulls, essentially. Right. So once you've applied those filters, you've selected your token of choice. It'll bring you to this section here. Now, this is an example of Unibot, but any token that you choose, at the bottom here where it's underlined in red, that's where you'll find the token's contract address, right? So you want to copy that, and then you want to paste it into tool number 2, honeypot.is. Show of hands, who's using this one? Anyone heard of it? So it's a great tool. Now, for those of you who don't know what a honeypot is a type of scam designed to get your money stuck in a token, right? Meaning that if you buy into that token, you can no longer get your money out, right? So for obvious reasons, we want to avoid that like the fucking plague, okay? Now, once you've pasted your contract token address into the field above, you can expect one of 2 outcomes, right? The first outcome being a pass, meaning the token has passed the honeypot test. Now, that can change unless the contract has been renounced. Okay, now I'm going to get into what contract renouncement means shortly. But for now, if it's a pass, that's great. If it's a fail, then that means that red flags have been identified in the lines of code within the contract. Okay, so if it's a fail, then you want to go back to DEX Screener, find another token, and then paste it in here until you get a pass, right? Once it's passed the honeypot test, then then great. You know, we can move on to the next step of the risk management checklist, which brings me to tool number 3, DEX tools. I'm sure you're all probably pretty familiar with this one. It's a very widely used platform. Now, I'm aware that that there are some things that you can view and extract from DEX tools that can be found on DEX Screener. The reason I use DEX tools is because I find that's a lot cleaner. It's a lot more intuitive, user-friendly. And for what I'm about to show you, it's easier to find these 3 things in one spot, right? So there's 3 major things you want to be keeping an eye out for here. I would say there's 2 green flags and 1, let's call it multicolored flag, right? So green flag number 1, at the top here where you see the red arrow pointing to that green sort of circle, that means the liquidity has been locked, right? So it means the team behind the token has locked the liquidity for a certain period of time, locked a certain percentage of the liquidity for a certain period of time, right? Now, that's good for 2 reasons. 1, because if the team has locked the liquidity, right, it means that a certain percentage of that liquidity has been locked for a certain period of time, okay? So yeah, a certain percentage of that liquidity can't be pulled for a certain period of time, right? So that's good. That's the first thing. The second thing is that instills a level of trust for those reasons, right? So that is the first thing we want to be looking out for, that it's been locked. That does come with a caveat, right? More importantly, we want to check how long that liquidity has been locked for, right? So I'm going to show you in the following slides exactly how we check that. And for example, if you come across a token that was created, let's say 6 hours ago, right? And their liquidity has been locked, but it's only been locked for 6 more hours, then that will likely be a rug pull, right? So you want to make sure that it's been locked for a certain period of time. Most projects will lock it for 6 months, 12 months, 2 years at a time, okay? So that's green flag number 1. The second green flag at the bottom here, where it's got the buy and sell tax fees, you see 4%. That's the sweet spot for me, right? So I like to buy in tokens that are between 3 to 5%. Now, the reason being, every time, so I suppose how that works is every time a token is bought and sold, a certain percentage of that fee goes towards the team that enables them to facilitate the ongoing costs involved with the development, marketing, and branding of the project, right? So that's sort of what I want to be looking for. Now, I would question a project that has very low tax or no tax at all, right? Because how are they going to fund the project? I know there's some exceptions to that. Perhaps there's, whales funding the project, but an exception doesn't disprove the rule, okay? And generally speaking, 3 to 5% is what most successful projects in the crypto space will initially set. That's pretty much it. And then the multicolored flag in the middle here where it says contract renounced. Now, by multicolored, I mean green and red, right? Green, it's a green flag because if the contract has been renounced, it means the developer behind the token has given up their ability to modify the contract, right? So that can instill a level of trust because it reduces the chances of a rug pull, right? Now, on the contrary, a red flag, because if the contract has been renounced, generally that is irreversible, okay? So if there are bugs in the contract, they can't be fixed, right? For the most part. So, and again, you'll find that most successful projects in the space, their contract hasn't been renounced, at least initially. So that's pretty much it for DEX tools. So the next tool is Etherscan. I'm sure you're all very familiar with this, right? Now, the reason I haven't started with Etherscan is because for the most part, honeypot.is, DEX tools, DEX screener, they're generally always up to date. They're always accurate and without discrepancy, right? But if you want to validate your risk management checklist in real time, then Etherscan is the tool for you, which brings me to my hot tip number 2, validate your risk management checklist directly on Etherscan, right? So if we go back to the slide here, you want to paste your token contract address into that field there, and then it will take you to this page. So where it says contract creator, where the red arrow is, you want to click on that link, and then it will take you to the page of transactions where the contract creator has set up the coin, right? And this is where you'll be able to find things like if the contract's been renounced, if limits have been removed, if liquidity has been locked, okay? And for the purposes of this example, I'm going to show you how to check how long liquidity has been locked for, okay? So you want to click on this transaction hash here, and then it will take you to this section here. You want to ignore what's going on at the top and instead focus on the bottom where it says click to show more. And then it will take you to this section here. Now, again, ignore what's happening up the top. And I apologize if there's any smart contract developers in the room, but for us normies, all you need to know what to do is to click decode input data, and then it will convert the above into a more readable format. So on the left, unlock date, and then on the right, there's a number. So you want to copy that number there, and then you want to paste it into the 5th tool, which is Unix timestamp converter, okay? So once you've pasted the number into this field, it will generate an output. That output being the date in which liquidity is locked up until, okay? So that goes back to what I mentioned before with Unibot as an example, and this is when Unibot's liquidity is locked up until, okay? So that's how you check that, and it's very important that you check this. But that pretty much wraps it up in terms of the tools, guys. Now for the final sort of hot tips and recommendations, I would say don't use the same wallet for everything, okay? Make sure that you have a separate wallet. You want to have your main wallet. You want to have a separate wallet for your trading, sniping, buying, selling tokens. You want to have a separate wallet for airdrop participation. And you want to have a separate wallet for NFT wallet, a separate wallet for your NFTs, okay? And I feel like that's pretty self-explanatory, right? You want to diversify your risk, right? You want to make sure that the one wallet that contains everything isn't compromised, okay? The next recommendation, always disconnect your wallet from any DeFi platform or dApp once you're done using it, guys. Even if it's a trustworthy website, platform, whatever, just get into the habit of disconnecting. It's all about mitigating risk, right? So if for whatever reason a trustworthy platform is compromised, then you're at risk of your wallet being drained, okay? So we obviously don't want that. And just lastly, to wrap things up, bookmark everything. Just get into the habit of bookmarking everything. I have a trading journal. This is literally how I have it set up. So in chronological order, the tools in which I use, and then it's also just good for tracking, buying and selling tokens. And that pretty much covers it, guys. Congratulations. You can now degen safely, hopefully.
First of all, I think I'm going to have to watch that video like 5 times over. That was amazing and so much information. And my first question, I know we've got some questions. How did you learn all of that? Did you watch videos or because that's like a lot of information you just gave, a lot of golden nuggets, but that's my first question.
Yeah, so the answer to that question would be X, to be honest, formerly known as Twitter, but X, to be honest. I just think that is the best place for everything, even over YouTube. YouTube's great, but I just find that you will have these sort of deep DeFi analysts that go really deep into their investigative work, and they do massive threads on sort of the tools they use, the systems frameworks that they implement. To be honest, a lot of the time I just sort of stumble across them, but I think it's, it works with the algorithms, right? If I'm liking content, following someone who's known for sharing this sort of alpha, then I tend to get recommended to other analysts and so forth. Telegram's also quite good, Discord, but yeah, to be honest, X is where I find all of this. Yeah.
Do you find it hard saying X? I still say Twitter.
Yeah, like I don't know what to say instead of tweet. What do you say? Post? Yeah.
Do a couple questions.
Well, hopefully I can answer them all.
Okay. Well, first of all, thank you so much. That was so informative. I've got a question, but before the question, just on the due diligence, an extra tip.
Yeah.
Because a lot of these guys put their code on GitHub.
Mm-hmm.
So I like to go to GitHub and see whether it's being updated a lot. And there's a lot of contributors.
Yeah.
So the more often the code is updated, because it shows you, and the more that means they're doing something.
Yeah, of course.
So my question was, with the liquidity, you said it's at the end. It's very important that you check the liquidity lock date. So I didn't understand the context.
So like on DEX tools, for instance, it'll just show that liquidity has been locked. That's it, like for the most part. So I like to get into the habit, and what I've found is that most of the rug pulls that occur, they occur because they kind of fool people into thinking, oh great, the liquidity's been locked, I'll just buy into it, right? And then it's pulled, and that's because the liquidity was only locked for like 6 hours, right? So yeah, if you get into the habit of checking and using that tool that I showed you, it's very important. Like obviously, if the liquidity has been locked, that's great. But more importantly, how long's liquidity been locked for, right? You'll find that most successful projects in the space, it's like minimum 6 months, 12 months, 2 years. Unibot is, the most popular, most widely used Telegram bot in the space, right? And as you can see, their liquidity is locked until next year. So it just instills a level of trust. If it's been locked for a certain period of time, yeah. So it's okay.
Okay, well, I have one more. I always have a million questions. But at the end, not that I'm a degen, but I have connected, and I probably will go home tonight checking how many sites I have connected and maybe disconnect them. But what I don't understand is the risk. How could me being connected get my wallet drained? Because from my understanding, it was only if the hackers get control of my private keys, and then they can sign transactions, which transfers the funds. So how is having my wallet connected to a site give them access to my private keys to be able to sign transactions to drain my wallet?
Yeah, so that's a good question. I personally haven't been victim to something like this, but it's just from a ton of threads that I've come across on X, experiences from traders that I know, full-time traders that have said that by not disconnecting their wallet from that platform, somehow they were fooled into signing something that seemed legitimate from the DeFi platform, or so they did obviously. Yeah, it's more of a phishing type thing.
Yeah, I just wanted to add to that. The disconnecting doesn't do anything technically. Like they can't, because you can connect to a website as any wallet. Like you can just fake pretend to be someone else. It doesn't matter. But the only risk is if like you go back to that website and it's being hacked and it shows a pop-up to like sign to send away your tokens or something. If you're already connected, that'll appear straight away. But if you're not connected, then it won't. But on the disconnect bit, the main risk is if you have approved tokens to a smart contract and that contract gets hacked, they can steal your tokens that way. So there's like a site called revoke.cash that allows you to unapprove your tokens to contracts, and that's safer than like the disconnecting doesn't matter that much. The revoke cache matters more.
Yeah.
Fantastic. All right. Well, thank you very much. Well, I'm sure Sean will have a lot more questions from the audience, and he'll stick around for a bit. But now we're going to talk about, thank you very much, Sean. We're going to talk about The rabbit hole is so deep. My brain hurts just thinking about how I'm sending my tokens and all this. Yeah, I'm more of a centralized girl. I have purchased and done a few transactions on the decentralized world, but I think you do have to invest a lot of time to be able to play in this world safely. So thank you for that snap lesson. So next, do we have the clicker? Oh, here we go. We're going to bring up Jonathon from Kraken, Australia, who is our main sponsor today. So if we can give a big round of applause for the nice spread and drinks and everything that they've put on. And I'll hand it over to you, and you can teach us how to stay safe and centralized.
Thanks so much for having me. I want to firstly apologize for my voice. I woke up with a bit of a throat thing, so apologies for sounding nasal. But a huge thank you to ATB for having us here. It's such a great community. It's a pity we haven't been here earlier, but what an amazing space. What a great group. I think the consistency as well is well, it's just so impressive and super important, because there's so much happening every week in crypto, and I actually came into crypto. I don't have the clicker. No, that's all right. I'll give you a little bit of a rundown as to what I'm going to talk about, but some of that is about the origin story for my a little bit about me and about history, because I've been in this space for a little while, and then kind of talk about what we're doing and what we plan to do, and then we're going to do Q&A, I think, for everyone. But yeah, certainly happy to answer questions at the end of it as well. So yeah, firstly, I forgot to wear my Kraken shirt tonight, but I figured that if I did wear it, it would be weird because there's a photo of me wearing it up there anyway. So it's worked out okay. So yeah, I've been in crypto since 2013. And that was because I was in a co-working space with some people, and I was in software. I was a software developer, and we got really interested in Bitcoin. And yeah, that was kind of really incredible moment, because we started going to Bitcoin meetups in 2013 and meeting people. And I met, core contributors to Ethereum and people who had been, like mining Bitcoin on their laptops for years and gaming with it. And yeah, it was a kind of like a special little moment for me, because I had a kind of a macro political economics background, and I was in software, so it was a kind of the Venn diagram really of my interests. I like to swim, and you can find me on X, which I hate saying personally. There's also the same LinkedIn as well. LinkedIn works. That's the same handle. Cool. So I think the reason we're here tonight is to talk about security, and it's absolutely the case that centralized exchanges have been problematic in the past. And, not only have centralized exchanges been problematic, so have decentralized exchanges. Fundamentally, crypto has suffered from hacks, suffered from, malicious actors, suffered from bad practice. So, there's a million more headlines you could put up there. Like, it's just almost every day in the last couple of years, it feels like there's another headline. It's quite depressing. But I think Kraken's kind of interesting. And one of the reasons I was really happy to start working for them in 2020 was because of their origin story and their vision, which is to essentially make it safe, right? Because for those who couldn't read this thing, it's pretty big, you can read it, but they want to accelerate the global adoption of crypto. That's the mission. And in 2011, it was founded, and Mt. Gox was a little bit after 2011, but I think Jesse, who's the founder of Kraken, got super serious about Kraken at that time, because he was witnessing the biggest trading venue in the market fall over. And that is, firstly, it's problematic that there was one venue with 80% of whatever it was of the volume at the time. But even more problematic was the way that it was being run. So, the kind of origin story for Kraken was to provide a to professionalize actually the infrastructure. And I think, primarily what is an exchange? An exchange is a venue for price discovery, right? And when we talk about liquidity and all these words, what that means is when you have buyers and sellers come to a marketplace, you discover price. And the more buyers and sellers you have, the more real that price is, the more real the reflection of the market the price is. So we are, I think kind of really interestingly still we still believe that to be critically important for crypto, to have liquidity, to have a venue where liquidity and price discovery can occur. And the interesting thing about it is the way that they go about it. So there's a couple of cool things. Firstly, we are in Australia. We have Australian business, Australian team. I was talking to people, there's about 60 Aussies that work for Kraken. About a third of those work directly on the Aussie business. We are all mission focused, like we all care about crypto. And we got this cool thing where, Newsweek, who reads that? I don't, but we're in the 100 most loved workplaces, which I think is awesome. But it's true. So fully remote business. So a lot of people who work for Kraken in Australia aren't necessarily working on Australian business. They're working on compliance. They're working in marketing. They're working in the engineers. We've got some lead project guys from, the guys who do the NFT marketplace for Kraken are Aussie. There's all sorts of people working on cool stuff for this global business. This has got a lot of words in it, but I think the most important thing to talk about here is the kind of philosophy of Kraken's approach to security. So because that was the OG story for Kraken was like, oh my God, this exchange just fell over. How do we do something that doesn't fall over? And this is kind of pre-DeFi, right? This is pre-Ethereum. So Jesse kind of got a whole bunch of people together and talked about how they could take the best principles from crypto, encryption, for example. Like we use PGP for email. If you've got PGP, you can encrypt your emails to and from us. We sign all of our email messages. We encrypt all of our personal data of our clients' data. We use Merkle trees to do proof of reserve so that we can, prove that your funds are on the exchange. They're not being siphoned off into another venue in Bermuda. We give a lot back to the community. In fact, we test third-party crypto products. For example, we have like a red team that actively hack our platform, but hack all the tools in the space. They've found vulnerabilities in Ledger. They found vulnerabilities in Trezor. They white hat those. They provide patches to those teams, and then pre-public release of them. So yeah, we're just like super passionate about that thread, which is security. And then we've most recently done this cool thing with a partnership with Kitboga because scam is this massive problem globally, but that's true for every industry. And so Kitboga, you've probably seen it. It's not just crypto scams. He actively participates in scams of all types online and like catches these scammers out, like videos himself talking to the people. Oh, so what? You need my bank details now? Cool, here they are, right? And he goes through the whole thing. So they're quite fun to watch. I'll check them out. But that's this guy here. We had our chief security officer on that show with him to talk about what we do. And yeah, I think that we participate in that problem by trying to assist, right? And so yeah, I think there's some cool stuff. And this is not to say that there are absolutely not risks with centralized exchanges. And also with the modern I guess every time there's an innovation, unfortunately, there are people trying to find weaknesses in that innovation, which is like depressing, but also kind of interesting because you get to see vulnerability play out in real time, and you get to see things improve. So we try and help improve stuff, but unfortunately, like this innovation, the same thing happened. People lost stuff. Rug pulls is one issue, but hacking the platforms, draining people because of phishing, all those kinds of high level scams which are based around attack vectors, social engineering, all those kinds of things. So yeah, we kind of try and apply our philosophy of security to all platforms, and there's going to be more and more of this stuff coming out as Kraken keeps investing and building and building tools for the community. So yeah, so why do we care about NFTs? Yeah, okay, profile pics, yeah, that's one thing, but there's a massive suite of use cases. I think gaming's probably the next big thread that you're going to start seeing. I mean, everyone's probably heard of Immutable here, a great Aussie business. You know, a lot of their AAA games are going to start coming out in the next 6-12 months. So we think that there's a really important role that a centralized exchange can play in allowing you to access those decentralized tools. So what we are doing with this platform is allowing you to purchase from OpenSea, for example, through the platform. So you can use a centralized wallet, right? Which is, interestingly, even Jesse's out there saying, not your keys, not your coins, pull your funds off our platform if you want to. But we have this kind of like big footprint with huge amount of engineers committed to working on this stuff. And then we're kind of regulated to in a lot of just different jurisdictions. Australia's a different story. But the really interesting thing is that you can bring the best parts of centralized exchanges to DeFi, and that's kind of what we're trying to do. So, you know, you can get the benefits of the cool new stuff, but not get exposed, not expose your wallet, not you know, not get rugged by the platform. Yes, the underlying asset, that's a different story. And there was a really great chat then about how you can look out for those kind of risks. But in terms of security risks at the level of the platform, yeah, we're trying to mitigate those and honor the underlying, right? Honor all the rewards, honor all the cool stuff about DeFi, in this case, NFTs. And then the same goes for the staking. Like, I think staking is a really interesting, people don't talk about it in terms of DeFi, but staking is DeFi. And staking is like, we run one of the biggest nodes, one of the biggest Ethereum nodes. We do that really successfully. And we do that. And we also, I haven't got a slide on this, but we also run a Lightning node. So we have one of the biggest Lightning nodes for Bitcoin Lightning. So yeah, we participate in the ecosystem as a contributor, but also then allow people to leverage that and tap into those networks. So in the case of Ethereum, it's all on chain. We also have a kind of, I think we acquired a platform called Staked, which does institutional grade non-custodial staking. So if you're a bank and you want to stake and you don't want to use a third party, you can do it yourself. They run those platforms for those guys. But yeah, I think the theme here is bringing expertise to the table, right? And then the next part of the story for us will be kind of institutional grade custody. I know there are already players in the market doing this, but this is, I think it was just announced or leaked or whatever you want to call it on Bloomberg the other day, along with some other news that we'll be leveraging not only like the 12 plus years of being in the cybersecurity industry, I guess is the way of thinking about what Kraken is, but also the fact that we have a qualified custody solution. That's like a regulatory wrapper. So that means that you can, if that's what is important to you, look at the regulations, look at the platform and say, well, these guys meet those, right? They meet those ISO standards. They have the tick of approval from so-and-so. If there's a problem, I know under the terms of this particular jurisdiction that the law will allow me to go after them. If that's important to you, then this will be a product I think will be interesting to people who need that kind of solution. But I think that the important thing, especially from us as a kind of from a philosophical point of view, is that we encourage people to absolutely manage their own crypto. And actually, during I think the FTX scandal, crisis, all of the above, Jesse was out there on Twitter at the time saying, pull your funds from the exchange. Like we can prove that they're there. Don't worry. That will not be a problem. Obviously, we want people having funds on the exchange, but that's not critical to the mission. What the mission is to get people into crypto, right? And we see ourselves as being a bridge there. So we make sure that we do not fall over, i.e. we're not dependent on having client monies on our account to exist, right? We have market makers that will work with us to make sure that there's liquidity, all that kind of stuff, but the exchange will exist without people's money on it, and that is the key. Cool, that was the last slide. But yeah, happy to answer questions now, unless you want to do a group Q&A. but I kind of blasted through all that. Sorry if I spoke too fast. Aspirin's probably catching up with me.
Let me get a
But yeah,
mic
we'll
to
get the
you.
mics going
A mic
around.
will help our online audience. This is our friends from Redcliffe, all the way from Redcliffe. Thank you.
Cheers, mate. Just a quick question. Do you guys plan on bringing out a debit card? I know a lot of centralized exchanges want to bring out cards. Do you guys have any plans for that?
No public plans. I mean, we've looked at it over the years, but it's just not something that we've gone down the road for.
Cool.
Yeah.
Oh, Redcliffe too.
Yeah.
Love Redcliffe.
What are you guys planning on doing to bridge the gap with traditional brokerage houses in terms of fee structures? So one of the things that bugs me about trading on crypto, doesn't really matter where you go unless you're an influencer with mega fee discounts from getting people to sign up under your ref link. You pay pretty significant fees to any exchange. You guys no different to the next, per se. Are there any plans to bridge that gap where, you go trade on a traditional brokerage house, you pay the spread, or you pay, a couple of bucks here and there to get in and out of trades? Is there any progress happening in that space?
Yeah, it's an interesting question. I mean, I think we have always had super transparent fee tiers, which has potentially been problematic for us versus some competitors who offer rebates and give lines of credit and stuff like that. But that, in our view, was risky. So we have a super transparent, level playing field marketplace because we want there to be as many counterparties there on the same terms as each other, so that they're incentivized to be there, rather than incentivized to overload in one particular spot or the other. So what we, I think, when you talk about brokerage, what we also have only recently, and historically, Kraken's only been a live market where we have been not a broker, we have been an exchange. So what we do is match the orders. We never take a position. We don't buy the crypto from you and we don't sell it to you. However, that I think 3 years ago, we launched a kind of more what we call instant buy, in which case that is the case, but it's only for certain value. So it's not large value. We have an OTC desk that does deal with large value trades. But in terms of the relationship we have to the client, the majority of our business is matching orders, not acting as a broker. I think it's a good point that you raise spreads. So, $0 trading, all that kind of stuff you see, for stocks or whatever, there's always money being made somewhere, right? The business has to make money, and you kind of want the business to make money. I think for similar reasons to what was discussed earlier about DeFi, if you've got businesses not making money, then there's a higher chance that they don't exist in the future. So, I think what we have seen though is that crypto fees have been super high. When I first started working in the space in 2013, it was like 5%. You saw businesses charging 5%. That still exists somewhere. There's all sorts of crazy stuff. So I think it's coming down. And over time, you look at any other mature financial services market, it comes down. If you trade certain volumes on our platform, it's as low as, 10 basis points or whatever it might be. But yeah, I think it's just about time and those fees will come down. But I don't advocate personally zero fees.
Thank you.
You go first. Yeah.
All right, cool. Thanks a lot, by the way. So it's good to see you here, and been looking at Kraken for quite a few years. So my question though is, a few months ago, the big banks in Australia and the smaller ones as well started quietly, privately sending us letters that you cannot, from any and all of your accounts in total, trade more than $10,000 in a month. Otherwise, they shut you down. You're familiar with that. So what are you doing, or what can you suggest? Because sometimes, you can be caught out by that as a trader. You might need to put in something so you can, rescue yourself out, or things like that, So because I think it's part of security in a way.
Yeah.
So what are you suggesting or doing?
It's a massive problem. And it's detrimental for everyone involved, not just exchanges. I mean, that's a limit that's being imposed on Australian clients. Kraken's in a privileged position of having clients globally, but it's happening in other markets too. And all I can say is they've gone to the mattresses. Like, this is a war. So there's lots of reasons for it. And there's some legitimate ones, like, the scam stuff, the risks are there to a certain extent, but they can be mitigated in different ways. And we don't believe that applying blanket limits is the way to do it.
In fact, the risk is like 1% of the people.
It's unfortunately a product of multiple things. I mean, in Australia, the relationship between crypto businesses banks has been antagonistic for a long time. Ever since I've been involved in the space, there's been, it's been a challenge, right? It's been a challenge to get a bank account. You hear of individuals losing their bank accounts for no reason, really, sending money to an exchange, legitimate exchanges. The problem is, it's very easy for the banks to do this because it's within their terms of service, but also they can point to the fact that there's no benchmark other than AUSTRAC, which is an important part of any like local financial services business that you comply with AUSTRAC, yes, but there's no benchmark you can point to and say this exchange passes that hurdle and therefore they are less risky than another. And regulation is a double-edged sword. I think a good example of this is Kraken has a banking license. This is partly because of the time it takes us to do stuff, partly because of the time it takes regulation to do stuff, but we haven't been able to use that for 4 years. We are on the verge of being able to use that in the US, not here. So, regulation is really interesting because it would then allow you to say to the bank, well, this exchange meets those standards, and it's very hard for the bank then to say, oh, well, the risk is too high, right? On a blanket level. They could then look at individual transactions, which is what they do for all other transactions, is individual basis, not blanket. So, what are we doing? Okay, so firstly, we're engaging with the banks through so you saw up on the board there, Blockchain Australia, they're a great advocacy group. There is going to be an interesting moment in a month from now where I think we need to, as an industry and as a group of people who care about blockchain, not just crypto and trading, but about the use of the technology in general across the different industries that we see it applicable to make some noise about moving the conversation here in Australia on, because the lack of clarity is the conditions for these kind of behaviors that the banks are exhibiting is because of that vacuum. And so they very rightly have nowhere to point to and say, well, we can be comfortable with the risk because there's nothing you can point to. So we absolutely need that. There's been a lot of other stuff happening politically, but there'll be a political moment. You can see in the US, there's this kind of stand with crypto thing that Coinbase are doing. I think we need to do something similar here. I think we need to get active here. I think we need to kind of, fundamentally fight back, because the majority of people that I meet are, they're enthusiasts. They're right. And so, and the cool stories you see about these amazing businesses, Immutable, all these big name stories, the Warwick Brothers and Alluvium and all these cool innovations are at risk of being crushed, and all the potential stuff that's going to come down the line with people building today are at risk of being crushed because of the uncertainty. So even though I think regulation can be problematic, I think it's actually important right now. And you're seeing it play out in real time. So there's a long-winded answer.
All right. This kind of bounces off of then something that you talked about in your talk, and I might not reword it correctly, but you were talking about how you use, I think you said Merkle trees for transparency of your proof of reserves. So my question is for people that are relatively new to the industry, and there's these centralized exchanges, just like any business, we trust the banks because they've been regulated. We're this unregulated. So what are some tips that you can offer, if they're like trying to decide, oh, should I go with Kraken or should I look at this or that? Should they be looking at their proof of reserves? What are some other signs that they're not, taking your money and then sending it to FTX?
Well, the super cool thing about crypto is you can move it really fast, right? And the really awesome thing about exchanges is that you can have more than one account. And so actually what I advocate, which is not necessarily my interest, is for you to have an account at multiple exchanges like you do, Renee. I think it's really important you do that. And then you can spread, your risk that way. That's one way you can do it. And the other way you can do it is you can pull stuff off quickly if you need to, trade where needed. I think that's all really important. And so, yeah, and even if there was regulation, you'd probably still do something similar. I mean, I have multiple bank accounts. It's you get locked in, and that's the strategy. But I think you can be a little bit more agile when it comes to your choices in crypto, CeFi, DeFi, whatever it might be. So there's another question over here as well. So if there's, that one down there and one more. Is that right? I think there's one over here. Yeah.
Sorry, I actually just had a follow up with a proof of reserves question.
Yeah.
My understanding is that Kraken uses the
yeah, I can hear you. Yeah.
Kraken uses the Merkle tree system, which takes, say, for those doesn't aware, that it takes at any point in time, takes a fingerprint of all the balances which is available on Kraken. unfortunately, like because it's a snapshot-based system, it's quite useless because you can just borrow funds from a partner or misappropriate funds from users and give the incorrect information kind of thing. Given that all the issues with how FTX and all the FUD around Binance and things like that, why doesn't Kraken use something more reliable, such as the Chainlink's proof of reserve system, which gives like continuous attestation? They've got better systems because they can use off-chain as well as on-chain data feeds as well. So is there any plan to like move towards like more transparent kind of system, which is not just like a snapshot at a certain point in time?
Yeah, so I think it's fair to say that we are working on lots of things. I can't confirm if we're doing that, but we are absolutely committed to using those kinds of tools, in particular crypto tools, and to essentially imbue crypto into the platform. And yeah, I agree that the moment in time snapshot has limitations, but it's about intent, and there's always timing risk. There's always timing risk with any counterparty. Even if you've got the funds there, you could have latency issues. You can have all sorts of issues. So it's one part of a puzzle for any exchange. And yeah, I can confirm that we are continually looking at improving, because we don't even offer that on every single asset. But the majority of people, I mean, Kraken, you can see on the public information that the majority of people, still trade, Bitcoin, Ethereum, the kind of major cap coins, and we certainly provided on those. But good question, thanks.
I saw Kraken was doing trading of US stocks last week. They applied for that. Are you going to do similar for Australian stocks? Do you have an idea?
No plans for Aussie stocks, but they're definitely the US stock things. Yeah, new news reported just last week, and I think the interesting thing is that the reason we're doing that is because we see it as a way to bridge more people into crypto, and to expose more people to the broader asset classes. So yeah, it's certainly going to be US first, but yeah, no immediate plans for us. So I can't comment on a launch date, but it'll be for US platform. So it'll be US license.
Big round of applause for Jonathon from Kraken.
Thanks so much for having me. Yeah. Chat afterwards.
How good is it? I'm not here to spruik Kraken. We're sort of agnostic, as I said at the outset, but how good is it to have the managing director of Kraken Australia here in the room? He's flown up specifically from Sydney for the event. So we thank you very much, Jonathon. And what that does is you can tell the minute he starts speaking is that he lives and breathes this. He loves it. It's his passion. I love that the mention of the Venn diagram there. For me, I've got a lot of interest, and I'm sure there are a lot of smart people in the room who have a lot of interest as well. But that political economy with a bit of financial, bit of general interest for making the world a better place, which hopefully most of us here, I think all of us are on about, is something that comes through there in what we've heard from Jonathon tonight. Another quick one, again, without spruiking Kraken at all, but to give you an idea of how deep the security thread runs in the organization, I tried to share a humble Google Drive slides with Jonathon's PR person, and the PR person wasn't actually technically allowed to edit my slides because they were on a foreign domain. So that's to me an interesting example of how deep that ingrained security that you talked about from Jesse, the founder, actually runs. So really appreciate, again, Jonathon and Kraken's sponsorship tonight. So we're here until 8 o'clock. Do avail yourselves of the drink and some of the food that's remaining, and get networking. This is the best chance to share information, share war stories, and we rub shoulders and I guess build together. As I said at the outset, even though we are in the bear, let's not be depressed. Let's press on, and let's do the right thing by each other and by the industry and by the world. Hopefully for better. So no more talk from me, no more philosophical rants. I might hit another glass of white wine or red wine, and I hope you do too. Thank you for coming out. We'll see you in a month. Is there anything else I need to say, Danielle? Keep an eye out for the Christmas party announcement. That'll be the 2nd of December during the daytime at a venue in the Fortitude Valley, which is getting very close to being locked in. And also ATB, of course, we're back on the first Wednesday of the month. We're very close to announcing an event there as well. First Wednesday, which is actually the first, because so we have ATB the first week, then the second week of November, mine's very much turned to Oz CryptoCon, Melbourne Cup, if you're interested in that. All of that is in the second week of November. So it's going to be huge, and let's keep building. Thanks everyone for turning out.